Hi. Today, let me tell you a certain way to look at multi-baggers, something that we are all interested in. So if you look at the US market, for instance, there have been these companies, Tesla, Apple, Amazon, etc., who have made tons of money for investors. And sitting today, you would say that anyone who got a chance to invest in these companies and did not invest made a big mistakes. But let me also tell you something else, that each of these companies came very, very close to bankruptcy at least once, sometimes more than once in their history. And this is true of many companies, like even Richard Branson's Virgin Group, for example, came within like half an hour of bankruptcy. So when you are making a decision to invest in a company, let us say you were planning to invest in Apple and you knew at that point 80 or 90% probability was that it would go bankrupt and only there was a 10-20% probability that it would thrive as a business, it would have been a sensible decision not to invest. So even though it eventually did give a lot of returns, when you're evaluating a decision, you cannot go only by the outcome, because the outcome may be something that was very low probability at the time that you were making the decision. So always evaluate your decision based on what was possible and probable at that time, not what eventually happened, because at times it was the other way around also. I mean, I have made some great money out of investments where, I mean, looking back, the decision was not correct in the sense that either I invested too much or the premise on which I invested did not come true, but still the company did something else which I could not have envisaged at that time, and it made a lot of money. So always when you're evaluating decisions, don't go only by the outcomes. Always think of what were the possible paths the company or the stock could have taken as you sat there on that date looking at the investment decisions. I'll talk about it in more detail at some point, and which is also the case in successful investors. It is not as if they knew at the beginning which companies would be multi-baggers. You know, if you look at even Rakesh Jhunjhunwala, he literally made hundreds of investment decisions, out of which, you know, bulk of his money, 90% of his money, came from just 3-4 stocks. So it was as concentrated as that. Warren Buffett says the same thing, and that he made hundreds of investment decisions, but only about a dozen contributed to his entire outperformance. So if you can think in probabilities, if you can remove the decision and the outcome as two separate things, you will go far in life and far in investing too.